This is Alan Bush with the Daily Financial Forecast for Thursday, August 4th. Starting out with the stock index futures, we were a bit lower in the overnight trade, but all of that changed when the Bank of England came out with more stimulus. The Bank of England cut their key interest rate by 25 basis points to 25 basis points. That is a new record low. Now that was widely expected. What was not widely anticipated was the additional quantitative easing. So in any event, stock index futures being supported by more stimulus. Of course, more stimulus means lower rates. Lower rates means higher equity prices. So this is in keeping with our view that the long-term trend for stock index futures is higher, and that the interest rate influence is dominating and will continue to dominate to continue this bull market. Now moving over to the currencies, we are seeing the British pound under a lot of pressure, not so much because of the widely anticipated rate cut from the Bank of England, but because of the somewhat of a surprise additional quantitative easing. So a lot of selling coming into the pound, this by default helping the dollar index to firm. Also this rate cut from the Bank of England takes the key interest rate there to its lowest level ever, and this is the first rate cut from the Bank of England since 2009. Also, we are seeing the interest rate markets firming as a result of the announcement from the Bank of England. The long end up quite a bit, over 1.5 points. However, we do feel that even though this news is bullish for the interest rate futures markets, that ultimately inflation, which is starting to become more and more of a problem, even though it's a very small problem now, I think it will ultimately get to be a much bigger problem. And I think international investors are aware of the potential inflation threat of so much global stimulus that gains in the interest rate markets will probably be limited as inflation becomes more and more of a concern. So this strength we're seeing in the treasuries will probably not follow through. However, the gold and silver firming up. The silver was under some pressure in the overnight trade, coming off of its lows, and the gold market higher after being lower earlier as well. More stimulus means more inflation. More inflation means the need for more inflation hedges, such as the gold market. So continue to buy every break in gold and silver, especially the gold. I believe, are in a situation where gold and silver will continue to advance. Any breaks should be an opportunity to buy, and this bull market in gold and silver is in the very, very early stages of a multi-year advance. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.